Well, good morning or good afternoon, wherever you're sitting. Good to have you here, all you traders. And we're going to get this thing started now. It is 11 a.m. here in the Seattle area where I'm sitting. It's 2 p.m. on the East Coast of the United States. So it is time. I'm Dean Jenkins, founder of FollowMeTrades.com. I'll be the presenter today. And I'll introduce myself a little bit more in just a few minutes. This is being recorded, and we will send out a link afterwards. But before we get started, just make sure you can navigate and use the features here in the GoToWebinar control panel. Definitely want to make this presentation interactive, to have you ask questions, and in a bit we're going to look at some of your stock symbols, so I want you to be able to type that in. So locate the questions panel and make sure you can find that and do that. Just type in where you're calling in from. Where are you sitting right now? It's always fun to see what state, what city, what country. We get people calling in from all over the place. Hey, we got Vermont, Phil. Hey, Phil. Ohio for Michael. Calgary. Eugene's up in Calgary. Glenn's in Chicago. We already got a good distribution. Buffalo, Tulsa, Jerry. Out in the Midwest, it's a little cold, I've heard. It's about freezing here in the Seattle area, right at 32. Oh, João, I think I say your name, from Portugal. Outstanding. Wow, from Belgium. Very nice. Charleston for Bern. And Gerald. Two people from Charleston. Arts in California. Probably a little bit warmer depending on where you are than it is here. That's for sure. Well, we got a great group. Got a pretty full room and people from all over the place. So I'm Dean Jenkins. I'm the founder of FollowMeTrades.com. I've been a trader for about 20 years. I used to work for Intel Corporation, and I got started in trading when they gave us stock options and employee stock shares, and they did really, really well. I joined the company in '93, and it took off, and I got real interested. It's like, wow, look, you can make some money with stock, and started trading other symbols, and won some, lost some, and along the way, I really wanted to develop a disciplined method for trading. So got started about 20 years ago, and I just really enjoy it. I do it full time now. I really enjoy trading. I enjoy analyzing charts, and I enjoy talking to traders. So this is the best job I ever had. I invite you to check it out, more of my bio on my website, and my website is here. It's followmetrades.com, and you can go, FAQs and just about Follow Me Trades. My full bio is there. But rather than just talk about my bio, my resume, probably, for traders, what matters most is my results. Am I a profitable trader? And here's on my homepage is my year-to-year results. So, back when the bull market was raging, we did really, really well. And, the last couple of years, it's been a difficult market. Last year in particular, there was just a lot going on. The market went up, went down, went up, went down pretty dramatically. And it was a little bit unpredictable. So I was really pleased, to more than double the indexes and to still maintain good profitability through a really challenging year. I see lots of ads all the time. I get emails probably just like you do claiming, hey, we can take $500 and turn it into 100 grand in 30 days. And I see those ads and I go, man, I want to sign up for that. I want that. And I've been around long enough and investigated enough of those to be a little bit skeptical, to be just a little bit skeptical. If somebody can show me statements for a couple years where they're able to do that consistently, I am in. I'll give them pretty much however much money they want to give me that system. The truth is, the reality that I have discovered is that you absolutely can be consistently profitable trading, but you also have to have some realistic expectations that getting wildly rich in a short amount of time, maybe a few people do it by taking enormous risk and getting lucky at the same time. But luck is not a strategy, right? It's not a repeatable strategy. Now, I do believe with a repeatable, disciplined strategy that includes significant, serious risk control, you can be consistently profitable. And I've done that for several years now. And I try to be completely transparent. You know, these results are real. These are results I'm getting in my own account with my own money. And I list here on my homepage. You can click in and see 2015. Here's every trade I took and the details of it. And what I show is I've got an edge, right? But I make no claim to win every single trade. In fact, in 2015, I lost 47% of my trades. I won 53%. The key statistic here is what's called the payout ratio, and the fact that my winners were bigger by far than my losers. And as long as I can maintain a pretty reasonable win rate and have a methodology for risk management, trade management, where my winners are bigger than my losers, I'm going to be profitable, right? And it's hard work. There's no magic black box system out there that's going to, you know, you can push a button and, you know, log in for half an hour a day and you know, print money. It's work. You know, successful trading is work. Here's my 2016 results. Right at a 50% win rate, but a 1.8 payout. So almost twice as much. I won almost twice as much as I lost, right? And I was profitable. And, you know, through a variety of market conditions. And I've had people ask me, and I think it's a fair question, are those real? Are those real results? Are you really getting those results? Are you really taking those trades with your own money? And the answer is yes. And, you know, what proof can I offer? Well, there's a guy named Emmett Moore. Emmett Moore is a super interesting guy. He runs tradingschools.org, and his mission in life is basically to uncover frauds in the trading room, trading education services industry. If you ever go read his bio on his site, he's got quite a history himself. He ran a boiler room and ripped people off and went to prison for it. And as part of his conversion, he's out there just kind of trying to help other people not fall into traps. So he did a review. He called me up out of the blue, and I was kind of terrified because I knew his reputation. But he called me up out of the blue, and we spent hours and went through my trades. And, you know, his conclusion was, he said, hey, you got a you know, he looked into my live trading account at my statements, and he said, hey, there's a verified track record here. He's a good trader, and the service is good. So you can go read that full review if you like, and please go to his homepage and read some of the other ones. So he's not just a shill. 90%, 95% of the reviews Emmett does, he tears people up because he uncovers fraud and calls it out into the open. So I invite you to check that out. Again, I'm not trying to boast or make exaggerated claims. Again, I think you can make consistent returns. I think you can be profitable as a trader. Getting rich fast, maybe not so much. All right, so maybe that's the best introduction, is just talk about my results. And again, you can go read my bio here from my homepage if you're interested in more details. So let's get on with the presentation. And again, please ask questions as we go. Make it interactive. Love to hear what's on your mind, what you're interested in. And there'll be a point here in the presentation where we take a look at your any trades that you're interested in. Before we get started, of course, the disclaimer. I'm a trader. I'm not a financial advisor. I got started in this business trading my own account. I started talking to other people, part of some discussion groups, and people, hey, it looks like you're making some hay there. Will you share your trades with us? And that turned into a business where I now share my trades. I publish my trades and I do some education. Okay, but I'm a trader. I'm not a financial advisor, and so I don't know your risk tolerance. I don't know your skill level. I don't know anything about you really other than your name and email at this point. And so I'm not giving you investment advice. I'm happy to share what I am doing, what's working for me. I'm going to share some trades that I like right now. Okay, I'll give my opinion on any charts that you'd like to look at, but I'm not giving investment advice. This is for education and information purposes only. Okay, I'm going to walk through, I'm going to show you the tools that I use, and I use kind of these three analysis techniques together. I simplify all of these, right? I use a little Dow Theory, I use Ichimoku Cloud and Elliott Wave. I'm going to show you how I use that all together to come up with high potential, high return, consistent trades with good risk management. Okay, before we jump into that though, I just want to give you an example. I'm going to show you. Here's a trade I like right now. This is US Steel, symbol X, on a 60-minute chart. Now, I've got my indicators on this chart, and I'm going to show you in the next couple slides, I'm going to explain how I use Ichimoku Cloud, how I do wave analysis. And on every chart, when I'm getting ready to do a trade, you can see this red line, this light blue line, this green line. Those are just horizontal lines I draw on here. So I can just visually see my trade parameters on a chart. And before I go into any trade, I want to know my entry price, I want to know my stop price, and I want a target price. And so that's what these lines, red's the stop, cyan or light blue is the entry, and green is my target. And I want to make sure I got a good reward to risk ratio. That if this goes where I think it's going to go, if it hits the target, I'm going to make a lot more money than if it hits the stop. It just sounds so simple, doesn't it? Right? But I think that's really important to only go into trades with a high reward to risk ratio. So I like U.S. Steel right now. I'm in it. We got in it Friday at 32.82. Still got entries. I like it, the initial stop at 34.17, and I think it's got a target 28.05, and that's on a 60-minute chart. So there's a pick I like right now. So how do I come up with these picks? How do I find them, and how do I analyze these charts? Phil's asking, are those the default colors for Ichimoku? No, they're not. In TradeStation, the default colors were hideous, so I changed them to what made sense to me, which is green and red. Right? Green for the cloud going up, red for the cloud going down. Yeah, they had some other color scheme that I didn't like at all. Okay, green and red. I'm a simple guy, man. I like to keep things simple, and that made sense to me. So let's talk about how I analyze charts, the techniques I use. And then we're going to look at some charts if you would like. Okay, I use 3 key tools in my analysis and my trading, Dow Theory, Elliott Wave, and Ichimoku Cloud. So here's a simple view of Dow Theory. This is by no means the comprehensive Dow Theory. Charles Dow back in the 30s came up with pretty complex theories on how the market moves and market rotation and from sectors and all this kind of stuff. But one of the things he came up with was about trends. And he said simply, he made the observation, and he's right, that if you're in a bull trend, you'll know you're still in a trend if you have a series of higher highs, higher lows, higher highs, higher lows. And as long as that pattern is unbroken, that trend is continuing and is intact. So that's, again, that sounds really simple, but as you apply it to a chart, it actually turns out it's really helpful. Okay, and a bear trend is just the opposite: lower lows, lower highs, lower lows, lower highs. As long as these lower highs don't go above the previous lower highs, and as long as the new lows go below the previous lows, you got you a bear trend, and it's continuing. Okay, so that's really helpful, and it's really easy. So bull trend, you can tell when it begins when you get 3 data points: a high, a higher low, it doesn't go below the previous low, and then a new high. Pretty good chance you're starting a bull trend when you get those 3 data points. And pretty good chance it's ending when you get a lower high, doesn't go put in a new high, and a new low. Right? Pretty good chance the bull trend just ended and has turned. Maybe not the long-term trend, but we're going to talk about waves in a minute, right? We have impulsive waves and we have corrective waves. And we can see that maybe an impulsive wave is ending and a corrective wave is beginning when we get this pattern. Same thing for the bear trend. Takes 3 data points to start it: a low, a lower high, new low. 3 data points to end it: a high, higher low, new high. When you get that pattern, watch out. Got a change coming more than likely. Okay, I'm going to talk about Ichimoku Cloud, and there's the gentleman on the right. The gentleman on the right there is Goichi Hasada, and he invented, or came up with this Ichimoku Cloud, or what's called the Ichimoku Kinko Hyo, translates into one look equilibrium chart. He was developing this in the 30s, interestingly, the same time that Dow was doing his theory and the same time that Elliott, Ralph Nelson Elliott, was coming up with Elliott Wave. Pretty interesting that they were all developing these theories, which are pretty well time tested back at the same time period. Goichi worked on this for 30 or 40 years. He finally published it in a 1969 book. Okay, so it's been around a while. It's not brand new stuff. All right, what is the Ichimoku Cloud? Here's what it looks like on a TradeStation chart. If you are an Ichimoku user, if you know something about it, you're going to look at this and you're going to go, hey, Dean, we're missing the Chiku line. Yeah, we are missing the Chiku line. I don't use it I don't find it useful in the way I combine Ichimoku Cloud with Elliott Wave. So there's 4 elements, 5 actually, on the chart here for Ichimoku Cloud. There's this yellow line, a purple line, a green line, a red line, and a shaded area between the red and the green. We're going to walk through these. Now the Ichimoku Cloud, I think it does a super job of identifying trends and predicting support and resistance. If you look, the cloud is projected several bars out into the future, and it's predicting support in this case, and if price is below, then resistance. Lots of indicators do a great job of telling you what happened. They are wonderful rearview mirrors. Very few predict with any kind of accuracy or usefulness what's going to happen in the future. So the first element here in the Ichimoku Cloud is this yellow line. I bolded it. It's called the Tenkan. It's like a fast-moving average, very similar. Fast-moving averages are calculated from the average of the closing price of however many bars you're looking back. The Tenkan line is calculated from the highest high, highest low average of the number of bars you're looking back. So a little bit different. Okay, very, very similar to a short-term or fast moving average line. Now when it crosses over the slower line, that can indicate a trend change, but it's got some false calls. So the purple line, it's simply the slow line, same calculation looking back a greater number of bars. So very similar to a simple 2-line moving average, just calculated a little bit differently on the Ichimoku Cloud. So we've got what's called the Sinku Span A going first or preceding. So span A is this green line, and it's a faster line, okay? And it's highlighting the edge of this boundary area. The Sinku Span B is this red line, and it's the other edge. It's the slower edge of this boundary. And then the shaded area between these is where Ichimoku Cloud gets its name from. This is called the cloud, or in Japanese, Kumo. It's the space between span A and span B. And it's projecting support areas. And the thicker the cloud, the more support it's projecting. Or, you know, when the price is under it, it's predicting resistance. Okay. So when we get a crossover, Tenkan over Kaijun, in conjunction with price breaking up through the cloud, right, that can indicate a new trend and potentially entry points. Okay, but there can be some head fakes there, some false signals. But once the trend gets going, the cloud does predict with some pretty good accuracy some support areas. You can see here in this chart, price pulled back to the cloud, but did not go down to it or through it. The cloud was predicting. Remember, these are plotted several bars in advance. It did predict where support was going to be. So that's pretty cool. So if I were to, hey Max, welcome. Hello to you too, and to everybody who's just logging in. We're rolling along. This is being recorded, and I'll send out a link to it as well. So if I were to evaluate Ichimoku Cloud as a total trading system, on the left, here's my criteria, everything I need in a trading system. I want to know what trend, I want to have trend identification, I want to get into that trend early, I want to know where support and resistance is at, I want a price target, I want a means for managing risk, a means to manage my trade, and I want to know when to get out of a trade. So Ichimoku Cloud does an excellent job of these first 3, but it's got some shortcomings, right? It doesn't give me any of these things, so it's not a complete trading system. So I need something else to combine it with, right? And the other thing I combine it with here is Elliott Wave theory. Now I know a lot of people roll their eyes, and you know they've maybe taken a look at Elliott Wave theory and some of the material published, and they're it's like, are you kidding me? You know, there's so many patterns to memorize, and it seems so subjective, and the practitioners can't agree on wave counts, and yeah, all those things are true, and that's why I don't do any of that. There's a simple 5-wave pattern, which is the core of Elliott Wave, and that's what I use. A very simple, repeatable, easy to spot, easy to interpret version of Elliott Wave. You know, my mentor was a guy named Bennett McDowell, and he literally wrote the book on Elliott Wave. The book is called Elliott Wave Technique Simplified, and he really gave me, you know, the way to look at Elliott Wave in a very simple, repeatable way. and he mentored me for years. We formed a friendship, and he actually invited me, and I wrote a chapter in that book, which is up on Amazon now. So Elliott Wave Techniques Simplified, Bennett McDowell, with a chapter by Dean Jenkins. So Bennett and I, when we look at a chart, we always come up with the same wave counts, and so do the people who have taken my training, and it's very repeatable, very simple. No huge tables full of numbers and labels and modifiers and all that stuff. I'll show you on a chart how we do this. Okay, here we go. Elliott Wave Basics. We only worry about 5 waves, and we really only are trying to trade wave 3, wave 4, wave 5. There's only 3 waves we're interested in trading. Wave 3 is super easy to spot. Don't need to make it complicated. It's the big dramatic move. It's the biggest move on a chart. Okay, so this is clearly wave 3. I've got them labeled, and I put my labels at the top. Some people have a different convention. They label the beginning, right? I label the end of the wave. Where did it end? Because that's what I'm really concerned with. So it's real simple, right? First move up is wave 1. First move down, wave 2. Big move is wave 3. The correction to this big move is wave 4. And now with wave 5, we can establish a target zone. So once we have a wave 5, right, a big impulsive move, right, we expect at some point there is going to be a correction to a big impulsive move. There almost always is. In trading, there's no absolutes, there's no certainties, there's only probability. You get a big impulsive move, the probability is you're going to get a correction to that move at some point. Okay? If most of the corrections go into a Fibonacci retracement area, these retracements, uncanny amount of the time, retrace into Fibonacci levels. So I use Fibonacci tools in analyzing my waves, right? The lines are highlighted here. It's 38.2 to 61.8. That is the absolute sweet spot for a Fibonacci retracement for a corrective wave. Right? If it does that, if it falls into that zone and then shows evidence of beginning a new corrective or a new impulsive move, highly probable that it's going to go into the next impulsive wave, and we can project that target zone with Fibonacci extension lines. The extension is 61.8 to 100% of wave 2 to 3. It's an extension of wave 2 to 3. So that's how we do it. Pretty simple, pretty repeatable. Okay. I use the tools I talked about. I use Ichimoku Cloud and Dow Theory to tell me when is this impulsive move beginning. And you can see I got a wave 3 entry right here, right as we had a line crossover. We've got price breaking above the cloud, right? And I've got some Dow Theory stuff going on of a high, a higher low, and a new high, confirming a trend beginning. Right? I got 3 things lining up telling me this thing's going to take off, and there it did, right? And then we had a nice corrective wave, met the rules, and then we're looking for the next trend to begin, and there's my Dow Theory, right? Higher high, higher low, new high. Got a great entry point there, and a pretty good probability this thing's going up into that wave 5 target zone. So that's how I use Ichimoku Cloud and Elliott Wave and Dow Theory together. And you know, anybody's got any questions, this is a great time. Just type them in and I'll take them on the fly. Satin is asking, what settings do I use for my Ichimoku Cloud? I do not use the factory settings from Ichimoku Cloud. I have proprietary settings that I've back tested and found to be better. So I have an Ichimoku Cloud course. I wasn't going to talk about the course today. I do have a course. It's pretty reasonable. In that, I go through the entire method I use rather than just go, here's the settings, right? I want to give the whole context, right, of the entire method that I used. Rosa, can I show how do I do the extension of wave 2 to 3 to get 5? Yeah, we're going to do that on some live charts, Rosa, here in just a moment. And if you got a chart you would like to look at that on, we'll do it. Okay, so looking at Ichimoku Elliott together, right? Elliott Wave fills in some parts of my total trading plan that, you know, some of the gaps at Ichimoku Cloud. It gives me a price target, right? It's really good at that. And it gives me an exit point in a price target zone. Still doesn't give me risk management, trade management. So I use Dow Theory. right? As price puts in a new higher high, higher low, new high, that's a significant resistance point, and that's a good point to trail my stop to. So I trail my stop up um, as price is playing out, as the trend is playing out. So I use Dow Theory to trail my stop. I start at the first low of a trend, and then as a higher high, new high, higher high is put in, trail my stop to the next higher low, and to the next higher low, and the next higher low. Along the way, I scale out and I take a profits, typically in thirds. As it crosses key Fibonacci lines, as it moves into the target zone, I'll take off a third, I'll take off a third, and I'll let the final third run and let it get stopped out once the trend proves that it is over. So, and I also use Dow Theory to size my entry. So I take the distance between my entry and my stop. So I use Dow to place my stops, and then, current price would be my entry. The distance between those, I use a formula to calculate my trade size, right? And my math is I don't want to lose more than 2% of my total trading account on any given trade. Right? I don't want to lose any, but that's the most I'm willing to lose. So I have a formula to calculate my trade size based on the distance between the stop and the entry price. Okay, so that helps me. So now with all those elements, I've got excellent in all categories, combining all those into a trading system. So there it is. There's my secrets. My secrets to trading. I pretty much just gave it to you. So let's look at some live charts, right? I showed you a trade up front. I showed you U.S. Steel on a 60-minute chart. Let's look at another one here on another trade I like right now on a longer time frame chart. So let's pop this up to daily. And while I'm doing this, yeah, type in some symbols you would like to look at. Art's got HD typed in there. Go ahead and type in some that you would like to look at while I'm showing you this other one that I like. So this is a daily chart. This is Walmart. Let me get some more data on the screen so it's clear. There we go. So this is Walmart. I like this for a short. And you can see even off the screen, look at that massive downtrend, right? That is wave 3. I said wave 3 is easy to spot. It's the biggest, most dramatic move on the page. There's wave 3. I measured it from the beginning, right? It retraced perfectly between these two blue lines, Fibonacci 38.2 to 61.8, right into there. And now we're looking at some pretty clear evidence of wave 5 starting, lower low, lower high. If it puts in a new low here at 67.06, that thing's a go, man. That's a nice short. My stop will be up here at this previous low, previous high on this is a downtrend, 72.10, and my target's going to be down here at 49.70, right in the middle of the wave 5 target zone. That's a huge reward to risk, right? Walmart doesn't move super fast, so that'll be a trade that we're probably in for a few months. And put option is a great way to trade that, or just short the shares directly. When I publish a pick, I publish the parameters for both. Short the shares, that's fine. Go long a put option. I keep my option strategy simple. I don't do spreads. I don't do flying creatures. I just go long the puts, right? That's the lowest risk, highest profit strategy for a directional trade. Okay, got some symbols here. Let's take a look at them, okay? HD, Home Depot. And now, this is a good point before I look at any charts. So I talk about using Elliott Wave, right? I think one of the things that frustrates people when they try to use Elliott Wave is they'll look and they go, well, I don't see a pattern, right? I can't count the waves. That's because they're not there. Not every chart has a really good, clear wave pattern that we can apply Elliott Wave theory to. And so if it's not there, when I'm teaching courses on this, I say, hey, let's look at a chart. And if we see a channel, that's interesting. If we see a trend, that's interesting. If we see a trend that is corrected, that's interesting. If we see random price movement up and down, right, with no structure, no pattern, that's a mess. And we're not going to deal with that, right? We're not going to deal with a mess. Okay. Oh, look at that. Lynn wants to look at Clovis. I can't wait to look at Clovis, Lynn, because we traded that. We nailed that one. It was fun. All right, HD for art. So we look at HD here on a daily chart, and I've already looked at this chart and I knew that it was going to be a bit of a mess, so I wanted to give that little speech before I looked at it. All right, HD is a bit of a mess, Right? HG is a great company and fun to go to their stores. But what we don't have, we've got a trend, but look how choppy. Look at the big swings in here. So, you know, there may be some other trading tools that would do a great job, but not mine. I'm looking for orderly trends if we go back to Walmart, right? Look how orderly this trend was. Big move down, big, clear, smooth retracement, clear evidence of the next wave. That's what I'm looking for. And if you contrast that to HD, right, it ain't there. It just ain't there. So there's no trade for me on HD. It looks like it's heading up. Up now, it's got a previous high up here that I would watch very carefully because it may encounter some resistance up against that. So other than that, nothing there for me. So let's take a look at HL for Phil. So here is, so this is probably, it's a mining company, probably related to gold. We had to, this is a nice big, you know, where's wave 3? Well, it's jumping off the chart, right? Right here. Here's wave 3. Did it retrace into a 4? Yes, it did. Perfect. It looked like it was going to head up into a 5, and this one was a head fake. It was a failure. Now, could it go again? I would see if it broke through this cloud, right? And I use a momentum oscillator down here, price oscillator. I like to see the momentum, right? If we get some good momentum, break through the cloud, you probably, high probability would be it takes out this previous high. And by then you got to question whether there's enough profit in it. I was only going to show you 2 trades here. I'll show you a better, in my opinion, my humble opinion, a better mining trade that we are trading right now is MUX, right? A little bit more orderly, nice impulsive move, perfect correction. And, you know, we didn't have that little spiky head fake thing. This one's heading up, right? We got a target zone up here at 5 1/4 for something that's trading at 379. We got into this at 350. So there's our freebie. Amazon, AMZN for Rosa. All right. Amazon's like my favorite company on the planet, right? And you can see I had a target zone projected here from a previous analysis, right? There was wave 3, there was wave 4, there was 5. It went right into the target zone. What do they do after they hit the target zone? Typically an A, B, C, right? It hasn't shown any signs of reversing into that C move yet, but a little late into this trend for Amazon for me. But this one went right into the target zone, and they do that when the previous waves meet the criteria. It's uncanny how often they just go right into that target zone. Pretty cool. All right, time for Clovis. Lynn. Here's Clovis Oncology. This is awesome. This was so much fun. So we took this trade, and we traded it back here. Remember, I said I can predict using the Ichimoku Cloud and Dow Theory. We saw this in this channel. We caught this break, higher high, higher low, new high. We caught it here and rode this whole thing up, right, from about 16 bucks almost to 40, right? And then we let it stop us out up here. It was awesome. It retraced perfectly, and we took it again for wave 5. And we took an entry here at 32.53, and look where it's at now. Went right through the target zone and is exceeding it. What's it going to do next? I would stay with it. I would have my current stop here and let this trend tell me when it's over. I don't bail out just because we hit the target zone. I let it tell me when the trend's over. If it does another higher high, higher low, new high, trail my stop to that high, to that low, right? Just let it run. But that's awesome, right? That was a really nice trade. Twice. We traded that one twice. So loving it. Nice straight man, Lynn, to bring that one up. I see PT. For Charles. You know, there looks like there is some sector rotation going on into pharmaceuticals. I got several I'm watching. I like them. This one, not so much. Not so much. What it looks like was there's an impulsive move down, a correction, and wave 5 already happened. And is maybe going a little bit lower. It's failing a little bit. It may go lower, but it's also a pretty choppy deal. I think there's better ones out there, Charles. I'm not crazy about it. Jen would like RCL. Royal Caribbean. You can see I've analyzed this several times, right? Different time frames. Got lines all over this thing. Let me get rid of them so we can just see current price, what it's doing. It's a pretty messy chart. It's a pretty messy chart. Big down move and now a correction. It was too big, right? I said when they correct into the expected zone, if I look at this, I'm going to just look at this correction. It went a little bit high. Oh, I was eyeballing it and I was wrong, right? If it goes above this 76.4 line, that's too high. So this one actually is right in the sweet spot. And if it were to correct from here, we probably got another impulsive wave heading down. We don't have it yet. So Rosa was asking, how do I show that target zone? I use the, I'll do it slower here, Fibonacci price extension lines. And then I go from my first data point to my second data point to my third. And that is how we project the price target zone. Now, we can't do it yet. I'm just showing you how to do it until this proves that wave 4, the correction is over and it's headed down, which it hasn't proven yet. There's no clear evidence that this down move has begun. So it's premature. I just wanted to show you because you had that question about how to use the tool. CBRL. You guys are active. You got all kinds of charts you want to look at here. What is this? Cracker Barrel, of course. So here's one where I talked about the retracement being too deep. I'll bet that retracement is too deep. I'll use my Fibonacci retracement line. There's a better 2. It went right to it. See how deep that retracement was? Almost 76.4. Looks like, what do you think? Did it make it to the wave 5 target zone? Go down there. It did. It's magic, right? It's magic, right? Wave 3, wave 4, 5, right into the target zone. Now the bad news is it's over. Right? There's A, probably a B, then a C. You can trade that C wave, but the big moves are over. Bummer. Let me catch a couple more here. Just running down the list. BABA for art. That's Alibaba, right? Yeah, nice. When I teach my courses on, I call it the Master Traders course, one of the things I teach is you should be able to spot a pattern on a chart and figure out whether it's worth analyzing within about 2 seconds. So we brought Alibaba up. I saw a pattern here that I really liked. It makes it absolutely worth analyzing. Let me show you what that pattern is I'm looking for. I'll fire up my pen. This is fun. Say I like talking to traders. I like talking about trading. Kind of a geek. I want a medium line. I want a yellow. Here's the shape, right? I want this, almost like a hockey stick. If I can see this, a big dramatic price move and a correction to that price move, I want to check that out. And look, there it is, and some evidence that it may be heading up. So I just wanted to show you guys that. What am I looking for when I see a chart? That's a wave 5 trade, and it's the most high probability because we had a wave 1, 2, 3, and 4, right, all happened beforehand. That makes wave 5 pretty highly probable. So we just measure from wave 2 to 3. Looky, we got a perfect retracement into this Fibonacci zone, 38.2 to 61.8. We have, it looks like 5 is starting. Now we want to let this, it's not ready. There's our high. We want a low and a new high breaking out of the cloud. That will be the trigger, right, when that happens. But we can go ahead and measure where wave 5 is going now, right, because we got some beginning evidence that the thing's turning, right? So target zone for BABA up here 117 to 136. Not an entry yet. You got to wait. Higher high, low, new high, up above the cloud. So that one's worth waiting for and putting on what I call a watch list. Okay, that's what we do, is put it on a list and then wait for that criteria to be met. Okay, but that one looks pretty good. I'm going to make a note for myself, right? I like that one. And that's an expensive stock. I would trade that with a call option. far out in time, probably out June or later. Once the price gets met, I would figure out what the right premium, right strike price is to trade that. Charles, can I scan for wave 3 or 5? Yeah, I have some techniques to scan for wave 3 or 5. I'm going to show you how I scan for some trades here in just a minute, okay? Let me do one more chart. I love looking at charts, but I want to keep moving here. TBT, I think that's that's one of the Treasury ETFs, TBT. Yeah, 20-year Treasury. Look at this. I've already measured it, right? Big impulsive move down, nice correction. What this looks like is it's beginning the next move down, doesn't it? It really does. Hasn't proven it. We got one move. We need 3 data points. We need low, lower high, new low. When we get that, we can start putting our projections on where that might head down to, and it's pretty significant. So not ready for trade yet, but the next trade on TBT would be, and this is ultra short, right? So this is the inverse. Yeah, ultra short layman 20+ year Treasury. Okay. So that'll be a nice short trade when it happens. Okay, I did want to cover some scanning here. I want to talk about how I scan. How do I find? Joe says, yeah, TBT is a long-term buy fundamentally. Yeah, well, if you're a fundamental trader, I'm a technical trader, right? I'm a technical trader. I got an MBA. I spent years doing fundamental analysis and studying earnings statements and all that stuff, right? And after doing that for years, that's why I'm a technical trader. So will TBT go up over the long-term buy and hold kind of thing? It absolutely could. It looks like there's going to be an impulsive move down over the next month or two, next handful of weeks. That's very tradable and very profitable. That's what I'm interested in, right? Yeah, if you stand back and look at the macroeconomics and what's going on in interest rates and money supply, yeah, you'd probably make a fundamental case. But I'm a trader. I'm a technical trader, trading momentum swings and trends in a fairly short time frame. So that's what I'm looking at there, Joe. So we can both be right and be friends, right? All right, back to the presentation. All right. I want to show you how I scan. This is really cool. How we can use, in this case, TradeStation, a radar screen, the Ichimoku Cloud indicator with Elliott Wave and Microsoft Excel. Take a couple steps, but once you get it going, it's cool. And I know you can download the same kind of tables in Thinkorswim, and I have to believe the other legitimate trading platforms have similar capability. So here's what I've got. I've got the S&P 100. This is an example. S&P 100 60-minute interval loaded into radar screen. I've got the Ichimoku Cloud indicator loaded here in radar screen. So it's just a table, right? That's got all these things and doing real-time calculations. There's 100 stocks. And what I want to show here is we can take these 100 stocks and we can export this data really quickly. Just, it's nice. TradeStation lets you do this. Thinkorswim lets you do this, right? You can select all that data and then export it really quickly over to Excel. And here it is in Excel, right? And I was able to paste it in. I put a few extra logic statements into Excel, like, here's the Ichimoku, hey, if it's below the cloud and the trend is down in a Ichimoku Cloud when you got the crossover, right? The fast over, slow crossover and prices below the cloud. That's a downtrend. Prices below the cloud. If those two things are true, I'm saying that's a bearish signal. And I'm also measuring how close price is to the cloud, right? I want them as close as possible, so I'm catching trends as early as possible. And so I put these logic statements in here real quick, and now I can sort my list. I can sort real quick on bearish trades, and out of 100, here's my top 4 or 5 bearish trades that I can go look at the chart. And I did this, and I actually found a couple of really, really good trades that we are actually in now. And then if I want to look for bullish trades, all I got to do is just resort this thing. What's the problem here? Sort on bullish, and boom, there's calling out some bullish trades and my highest priority ones here too. So I just wanted to show that's pretty cool. And we got access to some really nice tools for trading now. You know, with power computers and stuff. It's really fun. Okay, so that's one way I do scanning. I also go look at sectors, right? So I'm interested in the healthcare biotech sector right now, and one of the things I do, I just talked about it, is I generate a watch list, right? So here's my I'm watching a bunch of ETFs and commodity stuff all the time, right? And I've got a long-term and a short-term pick list, and you can see quite a few of these are in healthcare. And what I put it, I see a pattern that I'm looking for, like we were showing on BABA. It looks really promising, but it's not there. So I just go put an alert, right? And you can see if I mouse over the right cell, right? There it is. I go, hey, if this thing hits 77, I'm going back. There might be a really good trade. Because I'll forget. So I want to keep track of all these good high potential trades. So I generate a watch list and keep an eye on it. And I'll go add BABA to my list now. Right? So, hey, what's next? If this all made sense to you, and it's like, wow, I had some of those pieces, and you just connected a few dots for me, give it a try. Give it a try. I always like to encourage people, hey, try it in Sim first, right? Anything new, any changes to your trading method, yeah, let's try that in Sim before we put real money on the line. I just think that's an important discipline for traders. I have a stock pick service, and I'm going to talk to you about that, making an offer. And then I have a live trading room where we go through this 4 days a week at the market open and just take a look at the market. We look at futures. We project what's going on. We analyze your picks. I throw out a few picks that I'm actually taking with my own money. So the stock picks, right? You can follow my picks, right? I'm taking these with my own money. That's how I started in this business. And if you just want to follow my picks, I publish them. Every week we publish picks, and in addition to publishing the picks, it's not just I throw it out there and it's done. You're with me through the life of the trade. Where am I moving my stop to? Where am I taking profit at? What is the option contract I'm trading it with, or the entry target stop price for the shares? I include educational videos so you can understand my method. I got some downloadable PDFs. I have PDFs. I have calculators on my website that help calculate the correct trade size to follow my risk management guidelines. I'm trying to provide a comprehensive service so you can actually match what I'm doing. And if scanning through hundreds of charts every week isn't your thing, but you'd like to follow along with some good trades, you might consider this, right? And you can have access right now. So you can, go hit the link that I'm going to post right now, and you can have access to 5 trades that we're in, and a couple we're waiting for, right? Some good trades right now. So that would be in your inbox like immediately, in addition to the training material that's available. And you can, if you'd like, you can schedule a one-on-one consultation with me and ask questions, and just help get you started. Yeah, James said, sorry that I do not concentrate on the futures markets. I watch the futures markets in my live trading room. We do call out some trades if they're there, but that's not our focus. I like the futures markets, the E-mini and the gold and oil for, big market trends and where are things going, and to point me to ETF and stock trades, right? But I prefer to trade those with stock and ETF with options, right? To trade futures, I think small intraday time frames are really difficult. Few people are very successful at that, despite some of the claims you might see. Very few people are really successful at trading futures intraday. I think you need to trade them larger time frames, and to follow a rigorous risk management system, you need a huge account, right? And I'm just really comfortable with stocks and options, so I got my money over there. And there's just so many more to choose from too, right? There's only a small handful of really deep liquid futures markets. There's a bunch of them out there, sugar and cocoa and coffee, right? All this, soybeans. In terms of big markets that are really liquid, you've got a handful, right? And I don't want to trade thin markets. So that's my spiel on futures, right? They're good, they're leveraged, but very few people actually trade those intraday consistently for profit. All right. Al asks, is there a big difference in trading and gains if you would have used options versus opposed to the stocks? It goes back and forth, right? So the bottom line is if you trade the stocks, right, the winners are going to be bigger. If you trade the options, the losers are going to be smaller losers, right? So it's a mix. It's a mix, and it depends, right, on where we're at and what the market's doing and the individual thing. So I think in the end it kind of washes out, Al, but it goes back and forth. So that's the deal. You can sign up for I think I put a link in the chat area. Yeah, I did. For my picks, $39. Try it out for 30 days, a whole month for $39. That's a pretty good deal. And again, you go sign up for that. The link today, you'll have access to trades that you can then go put on tomorrow at the open. It's holiday today. When the market opens tomorrow, you can get those trades staged and be in. So again, 30 days, $39. The list price is $127, but if you sign up here, you get $97 a month. Or that's month to month. You can cancel at any time. No hard feelings. No questions asked. You can get a free consultation with me, and you can get in right now. So invite you to check it out. Get a month for $39, and you got some good trades that are, you know, if history's any record, they're going to more than cover the cost of your trial for any account size. People ask, you know, on an ongoing basis, what's the minimum account size to, you know, make good use of this? About 10,000, I would say, would be a good minimum. Charles, have I ever tried the method on the Forex? Yeah, I've analyzed lots of Forex charts, right? I think you got to pick something to focus on, and I really, really like stocks, ETFs, and options. So that's my focus. But I've done lots of analysis on Forex, and it works, right? Any chart that's got an open, high, low, close price bar, the method's going to work, right? And I have traded currency ETFs, and I like that, right? Currency markets are relatively orderly, and when they move, man. So that's the answer there. I do have a live trading room, and you could be in that room tomorrow. We're in the room 4 days a week, Monday through Thursday, right before the open, and then we're there for an hour and a half. So what we do is, you know, if you want someone to be, you know, a day trader to call off E-mini trades for you, it's the wrong room. That's not what we're doing, right? But we do real-time analysis of the major markets. We project key price levels to watch throughout the trading day. We do scan for some real trading, and I'll take those trades with my own money if we find them, right? And I'll call them out in advance. And we do explanation. We do training on the markets. We analyze any picks that you're interested in. So it's a pretty productive session. Lots of training, lots of charts we're looking at and paying attention to the market. And Monday to Thursday, it's an hour and a half, $39 a month. Pretty reasonable, and the link is in the chat area there. So there, I came in, I brought it in under an hour. So I got time for questions, and what I'll do is I'll just hang back and let you, of course, go hit those links and enter your credit card and sign up, or ask any questions that you have. So I'll hang here, I'll go on mute for a minute and just wait and be available for any questions. But hey, thanks for showing up. This was fun. It's a good way, I thought, to spend a holiday. A lot of people off from work. So thanks for being here, for paying attention. Thanks for your questions, for the symbols to look at. I really enjoyed it. All right. And again, I'll just hang back here, go on mute, and see if you got any questions. Have a great day.